Hey, everybody, welcome to Options with Hans. Happy 4th of July. I'm Hans Albrecht, of course. I was a pro options market maker for 15 years and an income fund manager for a decade after that. $1 billion in options strategies managed, including downside protect funds. So offense and defense go hand in hand. I managed a couple of black swan funds that protected your holdings to the downside. So if you like what you're hearing, please like and subscribe down below. Hit that bell if you can find it. I'm not even sure where it is. And then also grab my free options cash flow blueprint, the Crush the Premium ebooks. Those are giveaways that don't suck for a change. So enjoy those. And I'm going to remind you today of my super bundle for July 4th, which is, of course, my popular Leaps Trader program. But if you get a ton more with that, and the Crush the Premium, you're going to learn to go long options the smart way with more of the good, less of the bad. You're going to learn income trades the smart way. Plus, you get the Nomad and probably what's my best creation ever, the Volatility Ninja course. What more do you want? Say goodbye to those 90% win approaches that never make you any money. Funny how that works, right? This is where your search ends. So today we're going to talk about two companies after my disclaimer right here. I'm going to mention the disclaimer, of course, as always, this is for entertainment and educational purposes only. It is your trade and your responsibility. And if you're okay with that, let's move on. We're going to talk about Goldman Sachs and Reddit today. A couple of position updates. We have these. They have reacted very, very nicely, very, very quickly in the program. And the members got those trades. Terrific, terrific stocks. And so let's get right into the crux of it. I'm going to start with Reddit, which is really this company that it has this amazing growth. We've seen this 61% revenue growth, positive cash flow for the first time, which was unexpected. And these amazing, this sort of almost like a new development of locking down these AI licensing deals, right? So we saw one last year. It's not that new, a year old, but what the point is that this data is going to become more and more and more interesting for people, right? And what I mean by that, if you watched my earlier video, there is a problem out there. There's only so much good data to go around. So communities like this, which have real people having real conversations and sorting through real problems and having fun and crying about life and being happy about life and doing all these things and living life in a digital way, it is all real and it is all there. It's going to be more and more desirable over time because there is a bottleneck out there, right? There is less and less data around. There's going to be less of that good data available for these AIs to basically scrape data and create this sort of insight and the part of the really big next phase of AI that I call that inference phase. That everyone calls the inference phase. So you're going to be hitting constraints about how much data is actually available out there. And that's going to make these things have trouble scaling up efficiently anymore if you just kind of don't have that real data. And so the idea is that the data that is real, and there aren't that many communities like Reddit with the size and the heft of Reddit, that are available out there. So they are going to be more and more and more desired. They got 60 million from Google. I wouldn't be surprised if that doubles or triples. Money is no object anymore with these AI companies. They are paying literally anything. They just bought Johnny Ive's company, $6 billion, doesn't have a product, doesn't have anything. They are throwing money at this because there is a massive, massive arms race going on out there, and it's very, very, very serious. So we are going to be exhausting the amount of real data available. Think of data as this sort of literal gold rush, right? It's almost like this natural resource out there. And so if you want to continue with your pace of progress, if you're an AI and you're trying to train, and then use it for inference, that is going to start disappearing. So let's talk about another very important development. Look at this, Cloudflare. Right? So what is Cloudflare? You could kind of, everyone's like, oh, Cloudflare. Yeah, what do they even do? You can kind of think of them in a few different ways. They make sure that the internet basically runs smoothly. They're around the world making sure that all the stuff that we take for granted just kind of happens naturally. They're kind of almost like, think of them as like a delivery truck for pictures and videos and things that are made available on the internet. You don't have to wait for 20 minutes. They make sure that things are cached and available. Your video loads quickly. There's no buffering. They also do other things more and more. They're kind of the bodyguards for websites. So look at this, July 1st news, massive, massive news for creators, for repositories of important information, of real data. Cloudflare became the first major internet infrastructure company to block AI scraping by default. And they launched this thing called pay per crawl. So it's a kind of like a marketplace where publishers can request compensation from AI companies each time one of their pages is crawled. So the Wild West days that have been going on for a couple of years of AI being able to just kind of scrape and take whatever they want behind paywalls, in front of paywalls, whatever they want, which I still see evidence of out there, but that's going to be changing. That means real data is going to be worth more and more and more and more. And this company is just starting to kill it. They're starting to generate cash flow, right? This is different from the dot-com days. These companies are starting to really actually make money and derive value from this phase of AI. So very exciting. That's now 10%. So their ability to charge people for data is about 10% of their revenue so far. And then they have this whole other huge world out there, which is actually improving as well. Now, on top of that, the two AI features that I talked about in my last video, Reddit is really giving marketers these two new AI-powered toys. This is absolutely huge and shows that Reddit is on the ball and doing the right thing. So they created this dashboard called Reddit Insights. It's going to sift through 22 billion posts and comments. It's going to figure out the hottest topics and sentiment. They're going to sort of repackage that for advertisers and really give them deeper insight as opposed to just sort of words and phrases that position advertisers in the right place at the right time. This is going to be big. It's the age of insight, and these guys are putting that to work. So let me tell you, but these two features here, right, the Cloudflare and this, basically are tightening the supply of human quality content, just as those large language models are starving for it. They're starving for it and clamoring and competing for it. And all the while, Reddit is packaging all its data now into sort of these premium analytics that are now much more valuable to companies. So amazing moves by this company. There are risks, of course. Reddit positions very high on Google search, and if Google search is changing, then there's sort of some potential for some disruption. But it really looks like Reddit is starting to do the right things and react very quickly, right? Which is very important. So let's take a look here. Okay, so let's look at the chart. We've got Reddit, obviously sold off very hard with everything else in April and has been kind of battling back, but has really taken its time compared to a lot of other tech names, a lot of sort of pseudo sort of internet type names and AI names. And it's battled, hit its head on this sort of level a few times, and then finally broke out, right? So some of this news is starting to sink in that they may not be under threat quite as much as people maybe thought they were, sort of a la Google type situation where maybe people just use AI more and more and don't go to Reddit as much. They are starting to really move, right? This is what this new environment is going to be about. And I think we're going to see incredibly large deviations in results for companies, right? We're going to see, we call that dispersion. There's going to be sort of companies that suddenly are able to handle AI and some that really kind of drop the ball. And I think that's going to make for very interesting earnings seasons because we don't really know what this is going to accomplish, right? So it's making it very difficult for analysts to kind of think about, well, you know, how is this company going to do? Suddenly, oh, we got 2%, 3% productivity gains. That goes to the bottom line. It makes a big difference for these companies. And this is going to be sort of a known unknown. We know that AI is going to help, but we don't know how much. And that's going to make this a sort of very volatile and unpredictable kind of environment for the next couple of years. The only thing you can predict is that AI is doing something, right? It's going to be adopted. It's going to make a huge change, a huge difference to the world, to companies, to industries, to individuals. But how much is it going to affect things is kind of up in the air at this point. It's going to be very exciting. And that's why we kind of have to have our heads on a swivel, making sure we're in the right areas. So look at in our LEAPS Trader. This is our LEAPS Trader AI portfolio. We've got Reddit. We've got a position up 58%, and of course a recent one, June 17th. So basically, a couple of weeks we've been in this position because we saw what was developing here. The story is, you know, the way that I do things is I look to layer edge, right? I want edge from the option pricing. Maybe I'm looking at skew. Maybe I'm looking at term structure. I want edge from the story. I want a narrative. I want something that looks like a kind of strong, durable, secular story. And I want technicals to line up as well. So we've had this position because I do love it. We've got a position that's up 84%. That's been in there for quite a long time. But you know, some newer positions, for example, but this is only 2 weeks, and so we're up 25% in that position, which is really terrific. So Okay, so first thing I want you to notice, and I wrote about this at length today. If you're on my newsletter list, you're going to learn about this. A very, very interesting way that volatility sometimes reacts to upside moves in the market, right? You can see, and we see this on a lot of charts. You can look at big cap, you can look at more speculative, you can look at a lot of different charts. You look at the option pricing, it's actually moving up as the market keeps making new highs. And there are very good reasons for that, which I explain. I'm going to do another video on that because it's rather confusing to people. They think, well, the VIX is supposed to go down when stocks go up. Depends, right? So this is called spot up, vol up, and it means that people are, volatility doesn't know where this is going to end. As far as it's concerned, I'll give you the 30-second pitch. As far as it's concerned, it doesn't know where the top is at this point. So it starts pricing in parabolic moves, big moves to the upside. Once it finds a top, it's not intuitive, but once it finds a top, option pricing can settle down a little bit. So if we see a little bit of a top in the SPY, we'll see volatility, actually option pricing kind of compress a little bit. So it's a very interesting thing that happens occasionally. It's good for cover call sellers in some ways. It's kind of a unique situation that you see once in a while. So as the market melts up, we're starting to see that markets are panicking even in the option space a little bit. Now, if you look at a little bit more longer term, still very subdued, right? So very, very reasonable. It's not as low as some, Nvidia, a few other things that are kind of low, which I keep harping about. Like there's some really, really great upside plays. If you're in the program, you're going to find out about all this stuff and learn about the stuff I'm talking about. But there's some very, very cheap upside that is extremely compelling, right? No guarantees, but when I start to see things line up and options are cheap and skewed, then all these things start to line up, and that's stacking your edge, and things are looking extremely interesting in some areas. So for me, I think you could still get out there, and in Reddit, you could probably pick up, if you wanted, if you thought it was really going to go, which I don't have as strong a conviction on it as some other stocks. So I'll be honest with you, that's why I didn't do we'll talk about Goldman in a second. I did a LEAPS explosion trade on that. That's up 130% in 2 weeks. So that's a stock that I really had a lot of conviction in. This one I'm kind of playing. I see the story unfolding, and it's very interesting to me. And the market is a little uneasy with this narrative playing out. But I would prefer, instead of owning stock, there are other ways that you can do this, some stock replacement strategies, which you can learn in the program as well. So in here, I'd say, if you were really, really had strong conviction, you could pick up something like a June of 2026, 120 call, 125 call. And then if you really felt good about this story, you could go a little bit more LEAPS explosion. I looked at the skew. I won't show you the skew, but it's very reasonable. So you could position yourself in a smaller account. You might want to look at something like this, maybe, a 220, 210. I think this thing could get back to its old highs around 225, and then maybe beyond if this frenzy continues. So something like a 220 around 25 bucks, 26 bucks, that's an interesting play. 2,500 bucks for a one lot. I think you could get a lot of flex out of that, right? This thing goes, and as I'm going to explain in my skew video on this, the weird stuff that we're seeing in option pricing right now, you could win 3 different ways. So make sure you're following me on Twitter so that you learn a little bit about how volatility, how option pricing reacts to various environments. Which of course I've experienced deeply over almost 3 decades of having done this now and done volatility arbitrage. So it's fun. I think it's fun when other people are confused. I get people reaching out to me going, "What's going on with volatility? What's that?" When I go, "Well, this is because of this and that." And it's kind of fun knowing that, right? I don't know plumbing, I don't know carpentry, but I know this stuff. So it's always fun to kind of see the light bulb go off above people's heads when I explain something like that to them. So let's take a look at Goldman now quickly, because this is getting long, and then we'll enjoy the rest of the day. Okay, so Goldman Sachs, this is one of my favorite plays, and this is one that I think a lot of people were kind of underestimating. I was screaming about how this thing is positioned for all the positives towards the end of the year, especially all these IPOs coming from the AI theme. So you can see right in here, so as soon as it broke out here, I started putting on some upside broken wing butterflies, which sort of take advantage of Delta, short Vega, things like that. Fun stuff you can learn in the mentoring program. Different trades for different kinds of environments, right? You want to have that nice blend of Greeks that works for you depending on the environment. Up here, things are looking good again. It's starting to break out, technically good. The VIX is coming down. The market's calm. We start to get some whiffs of all these positive things from AI, from potentially those latter half kind of Trump positives, right? Regulation easing, that's going to improve return on equity. It's going to, all these great things that can happen potentially if the economy stays relatively strong, which I think it will. And then it starts breaking out here. We put on down in here, we put on turbo trades, which is going to be part of my next service whenever I launch it. And this thing starts breaking out, and we pick up Leaps Explosion, and we pick up the regular Leaps AI. I actually put it in my AI portfolio, believe it or not, because I believe this is a secondary AI name, which people kind of look at me funny about. But as you can see, it sort of played out. I did not expect this kind of move, but it was fantastic. And let's just talk quickly about some of the tailwinds that we've got going here. We've got IPO Mania, right? So IPO Mania, Goldman is on board. You can bet that the smartest guys and gals in the room are going to be figuring out ways to become more productive, more efficient, do things for less money. They already talked about how they can do 95% of the work involved in an IPO with AI, right? Like they're just going to make a ton of money. This is going to go right to the bottom line. The profit margins are going to explode. So they have something called the GS AI Assistant that they've rolled out to 46 employees, and it's showing that certain tools are helping them to draft IPO prospectuses, these pitch books, these things that they have to do on a regular basis, crunching these big databases. It's trimming that repetitive work by 40%. It's going to be unbelievable. Unbelievable. This is one of my favorite stories out there. It's horse out of the barn a little bit, so I'd prefer to see it kind of come down, and we do have earnings coming up, but I think the earnings would be pretty good. So we've also got this sort of stress test that just came out at the end of last month, which is looking good as well. So we got this AI tool, the stress test looks pretty good. Deal making is going to be fantastic. Valuation is not that bad, 1.9 times book. Remember, it's the stock's hitting all-time highs, but you have to remember stocks are often about the story, the narrative, the strength behind it. You can buy something that you think might do well in a few years, or you can buy things that are doing well and are a little bit more expensive, right? So the bottom line really is, if you think about that AI efficiency, these deals, these IPOs that are going to be coming out of the woodwork, lighter capital rules, which are going to really help them. You need less capital. That improves some of your metrics, and fees that are going to get revived across the board as the economy kind of stays relatively strong. Lots of deals coming, and potentially those rate cuts coming in and boosting the economy and helping in that sense. So I think they're well positioned. Okay, so here's our Leaps explosion trade. Now I'll admit I did not think this would happen this quickly. 126% in 2 weeks since June 18th. So really amazing trade, plus the core position, plus the Leaps AI position. And we have a turbo position as well, which is not what we talk about typically here, but that's doing fantastically well. Unique kind of position for unique circumstances. So in the Leaps program, you get these kinds of updates all the time. I've been sending them pretty much every day. Ideas, videos, exclusive videos. You get chart packages. You get all my reasoning, all my thinking. This isn't just throwing out ideas for the sake of it. If I don't see opportunity, I'm not going to do it. But lately, it's been a feast for great stuff. So you get lots and lots. This is the Goldman trade right here. Too late Powell. So I think he's going to be too late Powell. And so I'm keeping people informed as to what's going on out there. People have said they really love the insight. So great trade there. And let's take a look at some of the metrics here. We got term structure, pretty good, not bad, right? I don't see it really upward sloping. We looked at the MSTR, that's really kind of upward sloping, so that the pricing in potential craziness over time, but it's pretty normal. So I like that. I think the overall term structure is reasonable out where we want to look. And then if we look at sort of the options at the 1 year point, like look, this market's had a run up. There's no question this thing could pull back at this point. It's got earnings. I think it's an incredibly strong story longer term. But if you're going to be in the risk market, you have to be prepared for risk, right? You can't be in the market. Sometimes people come to me and they're looking for some sort of magic bullet where I never want to lose money. It doesn't work that way. You want great setups, great that I'm going through, right? Learn the things that I'm talking about and layer your edge to find out how these setups work and find the best setups. There's still no guarantee, but look at this pricing, very reasonable. Goldman going bananas here, of course, but I think it's still very compelling. Again, another example of that upside being still very reasonable. Like I said that when I put this trade on, this explosion trade, I said the same thing. I said, look, this upside is not expensive. And what does it do? It runs up like 100 points. So you can see the potential here, that the flex in these options is incredible. When they're not priced correctly, which I've been saying for 500 or 600 points. I've been saying upside calls are not priced correctly, but you do have to be very careful with how you approach these with these trades. So let's take a look at Goldman. So you could look at, if you wanted something just a little bit more dependable, it's going to be a lot more expensive, but you could pick up, something like a June 2026 640 call, 620 call. Right now, you've got a little bit of time value in there, so there's no question about that. But at a reasonable, the problem is that the in-the-money calls sometimes pick up some of that skew, that downside skew. We explain that in the mentoring program, but basically, it's not that important to know. But the downside is going to be absorbed into some of those plays. But you go deep enough, and it's not a big deal. And I've explained that in videos too. I don't think that Vega risk, which is the risk of implied volatility coming down, which is not that high to begin with. You can see how cheap it is. It can come down, but it's still cheap. And then if you really wanted to go explosion, you could maybe look up, I typically kind of maybe 35 delta, maybe something like that gives you really explosive potential. You're not spending too much on it. Something like a June 2026 840. It's going to give you a chance to breathe, right? There's no guarantee this is going to work out right away, but it's going to give you a chance. One thing I like about LEAPS is they give you a chance to be wrong, and they give you a chance to be right. Think of it that way. You get the chance to be wrong and not get shaken out, and you get the chance to be right when your thesis unfolds the way you hope it does. And that's a wonderful thing. So I hope you guys enjoyed that. Again, let's take a look at my LEAPS program here. Fantastic program. And we've got the July 4th sale on right now. It's a super bundle. The reason I call it a super bundle is because we only do it once in a while. And it's very, very exciting. You're going to get the best of all worlds and options. All this together is the most comprehensive program outside of my mentoring, which is very expensive. This is the most comprehensive approach to trading options combined with investing that you're ever going to find. Just period. And it's going to include this says 2 hours. It's actually going to be more like 3 hours session on July 19th to show you how to use all this stuff, how to navigate the website, how to read the P&Ls, how to go through these trades that you're going to learn and crush the premium. I'm throwing this in. Well, I'm not really throwing it in. It's part of the package. You're getting this. This is the income method. This has nothing to do with LEAPS. This is half of your barbell strategy. Your barbell strategy can very well be a LEAPS type approach with an income type approach, the best of all worlds. You get the MTI indicator that I talk about all the time. That's yours to keep. You can use that on anything. It's going to work on any instrument you put in there for Thinkorswim, TradingView. You get the Nomad on Condor course, very deep in volatility. And then maybe the proudest moment for me is really creating this Volatility Ninja course, because you're going to learn things in that you've never ever seen before, and that are going to change the way that you look at investing in general. Not just options. If you watch this stuff and you never trade an option in your life, you're going to learn about markets. You're going to learn about risk. You're going to learn about risk gauges. You're going to learn about environment and how important it is, and how important it is to read the environment in order to do better over time. That is incredibly important. And then you're going to get 1 month in the trading floor community, VIP trading floor community, with a student rate after that, a significantly lower student rate should you choose to continue. And in there, we talk about everything. So 1 year of LEAPS Trader Core, 1 year of LEAPS Trader AI, 1 year of LEAPS Explosion, the Crush the Premium course, the Indicator, the Nomad, the Volatility Ninja, the Option Bootcamp, the 3-hour session, the 1 month in the community. What more can I say? So happy July 4th, everyone. I hope everyone has a terrific weekend. It's absolutely beautiful here. I'm going to go for a swim in a moment, and I'm really happy that anybody who stayed to the end of this, thank you very much. Thank you for your support. If you don't want to get the package, that's fine. Keep watching my videos. You're going to absorb some great stuff. But if you really want to get on the inside with me and get into my brain, don't be scared. This is how you do it. Have a wonderful weekend, and we'll see you guys next time.